Hey there, welcome to the channel. Greetings from Koh Samui. In this video, I'm going to be going through the new expat income tax policy here in Thailand. This is one of the more common questions that I get asked from viewers and subscribers on the channel. So in this video, I'm going to do my best to tackle the topic. And obviously, since I'm not a certified tax professional, I'm going to be enlisting the help of Peter here at thethailandlife.com. I'll leave a link in the description below where you can read through this article on your own. But yeah, in this video, I just want to tackle this topic. So if you haven't subscribed to the channel already, please go ahead and do so. And let's get started. So in case you don't know already, there's a new tax policy on foreign income remittance to Thailand. So let's say you're getting paid in US dollars or euros or whatever your currency is, and you're transferring that money over into your Thai bank account. That's what's known as a foreign income remittance. And as you can see, they've got a very long article here. Here's the table of contents. And again, you can read through this article on your own, link in the description below. But essentially, there's a Thai tax residency rule. And in order to understand whether or not this change affects you, we first need to define what a resident is, or whether a tax resident in Thailand. In Thai law, a tax resident is defined as an individual who stays in Thailand for a period or periods aggregating 180 days or more in any tax year. So if you're staying in Thailand full-time or longer than 6 months per year, then you will be considered what's known as a tax resident in Thailand, if that makes sense. If you fall outside of this rule, you need not worry about the subject matter, as the change won't affect you. If you do fall into this bracket, please read on. So for me, I've been living in Thailand for 5 years now, pretty much full time. So I would definitely be considered a tax resident. But if you're leaving every 6 months, let's say you do some traveling, or maybe you go back to your home country, then you won't necessarily have to worry about paying your taxes in Thailand. And previous tax rules. So this is how it stood previously. As it stands, assessable income received by a Thai tax resident through employment, an overseas business, or property located abroad would be subject to Thai personal income tax only if the earnings were remitted to Thailand within the same tax year. For example, Sarah lives in Thailand for 180 plus days per year and works as a consultant for an international company based in the US. Under the previous tax regulations, if Sarah earned $50,000 from her overseas job in 2022, but chose not to transfer the funds to Thailand until February 2023, paid Thai personal income tax on that income for the previous year. Under the new law, Sarah would now be required to pay personal income tax on that income. So that's one of the changes. You'll need to pay the income tax regardless of when you're transferring it over. The new Thai tax rule as of 2024, so last year, which started January 1st, 2024, foreign sourced income over 120,000 baht or 220,000 baht for married couples repatriated to Thailand will be eligible for Thai income tax, regardless of the tax year in which the income was earned. And then income earned before 2024. What about income earned before 2024 brought into Thailand in 2024? Will it be subjected to taxation? Revenue Department says foreign sourced income earned before January 1st of 2024 won't need to be declared in Thai tax returns, irrespective of when it's brought into the country. So as long as you earn the income before, that income is not going to be taxed, sounds like, according to this article. Income earned prior to retiring in Thailand. There has been much speculation on how accumulated income prior to living in Thailand will be assessed. For example, a person lives and works in a foreign country and later retires to Thailand with his or her overseas earned income. Will such a person have to pay taxes on those earnings before retiring in Thailand? The Revenue Department says no. This is because the said accumulated earnings came from assessable income that occurred in the tax year in which the person stayed in Thailand for less than 180 days. And then they go on to talk about why is Thailand changing the law for expats. It's all about raising money, not about targeting expats. So they just want to bring in more income, from the expats that have been living here for, over 6 months out of the year. One assumes the legislative changes are aimed at wealthy Thai citizens with foreign income sources. Unfortunately, foreigners with residence permits or long-stay visas have been caught in the crossfire, so to speak. And the new prime minister says you should pay taxes on income you earn, no matter how you earn it. Now, here's an important bit right here in the article. Who has to file a tax return in Thailand? Anyone who remits, transfers assets into Thailand that are assessable income, pension income, investment gains, property rental income, property sale gains, dividends, etc. That could also include the paycheck that you're getting. For me, I'm mostly just getting paid from YouTube and Facebook, and then I also transfer those funds over to my Thai bank account. So most likely, it looks like I'll have to pay taxes on that income that I'm transferring over into Thailand. Regardless if tax is paid in another jurisdiction, if you have assessable income over the above threshold, you have to file a Thai tax return. If you are emitting non-taxable assets like cash from previous tax years or inheritance in cash, then you don't have to add this to the Thai tax return and don't have to file it if it's your only source. It isn't a requirement for visa renewal to have a tax ID and file a tax return, as some people don't have to file or get a tax ID. What is taxable assessable income? Direct and indirect financial transfers, ATM withdrawals, and credit card spending, if sourced from overseas, are considered remitted and therefore assessable income for tax purposes. So let's say you're transferring your income from a U.S. bank account, as I am, via Wise or Remitly or something like this, then you're just remitting it into your Thai bank account. Then you would need to most likely pay taxes on that as well. But I believe it's only up to a certain threshold. So let's say, 120,000 baht per year. Chances are you're going to be earning more than that and remitting it over into your Thai bank account. So I'm a little bit curious to see how this tax return works. I think a lot of people don't even really necessarily understand how to file their taxes in Thailand yet, myself included. So hopefully he touches on that a little bit as well in the article. And, obviously always best to talk with a tax professional about all this stuff as well. Don't just listen to a YouTuber. Best to talk to a tax attorney or tax lawyer. Pension taxation. Okay, so this is one that a lot of retirees are getting quite worried about, is the taxes on pensions. And here it says state pensions are assessable income. That doesn't mean you will have to pay tax. It means that you will need to declare payments if the amount goes over the tax allowance. It may be the case that due to deductions or tax already paid under a DTA, so that's the double tax agreement that many countries have with Thailand, including the United States, that you will receive a credit and do not pay tax. So you won't have to pay tax twice, most likely, as long as you're paying in your home country. U.S. Social Security. U.S. Social Security is not considered assessable income. So that's, chances are, if you're retired and you're getting a pension, it's going to be coming through Social Security. And they say here it's not considered assessable income. So you won't need to pay taxes on your Social Security. What is not taxable assessable income? Any asset or income that isn't transferred or spent in Thailand if left overseas. So as long as you're keeping your money, let's say in your U.S. bank account, and you're not remitting it into Thailand, you will not need to pay taxes on that because it's just remaining in your foreign bank account. Remittance of income from previous tax year when not a Thai tax resident. So if you haven't stayed here for over 180 days out of the year, and you're getting income, you're remitting from the previous year, you won't need to pay taxes on that. Remittance of any cash in the bank as of 31st of December 2023, as per the November announcement. So as long as it was earned before January 1st, 2024, you won't need to pay taxes on that either. And then remittance of original capital from investments, property, etc. Inheritance, which is quite interesting. So if you're getting an inheritance, not entirely sure if you transfer that over into a Thai bank account, will you need to pay taxes on that, or how that works exactly? I don't really know. But here it says it's not considered a taxable assessable income, which is quite interesting. That may apply for me later down the road. They also have some information here about eligible tax deductions. Thailand offers personal and family allowances, which can significantly reduce taxable income. These allowances are available for the taxpayer's spouse if not filing jointly, and children. Deductions can be claimed for medical expenses, including health insurance premiums. Interest paid on a mortgage in your name for a Thai property can be claimed as a deduction. Expenses for your own or others' dependents' education in Thailand are deductible, and donations to approved charities, contributions to approved retirement funds are eligible for tax deductions as well. And you can also get tax credits. But the one that I'm mostly interested in here is the double taxation agreement that many countries have with Thailand. So a double tax treaty, also known as a tax treaty or a bilateral tax treaty, is an international agreement between two countries designed to address and mitigate the issue of double taxation for individuals and businesses with economic activities or income sources in both countries. The main purpose of double tax treaties are to avoid double taxation, so you don't have to pay twice on your earnings. Double taxation occurs when a taxpayer is liable to pay taxes on the same income or capital in both their home country, where they are a resident, and in a foreign country where the income or capital is generated. Double tax treaties provide mechanisms to prevent or reduce this double taxation. So the US and Thailand have a double tax agreement. And then it also is for prevention of tax evasion. These treaties are also aimed to prevent tax evasion by requiring the exchange of information between the two countries, which helps tax authorities in each country verify income and enforce tax laws. Thailand has a double tax treaty with 61 countries, the US included. Chances are if you're paying taxes in one country or home country, you won't have to pay again over here in Thailand, which is great news. The Revenue Department has stated if you are deemed as a tax resident of Thailand staying in Thailand for 180 days or more, the tax paid abroad can be credited against the tax paid in Thailand in the tax year that assessable income was brought into Thailand, according to provisions of double tax treaty. That makes sense, I guess. It's still a little bit confusing to me. But yeah, also, if you have any questions about this stuff, just post in the comments below. I'd be happy to answer to the best of my abilities. But yeah, it says, regardless of the tax treaty, you may still have to declare the income in Thailand as part of your tax return. And as stated by the Revenue Department, you will be credited for the tax already paid. So that's good news. Here's some common misconceptions of DTAs. A DTA in place means that individuals are protected from being taxed in Thailand. False. Being taxed in another country on assets already exempts from taxation in Thailand. That's also false. So it doesn't necessarily exempt you from paying taxes over here as well. Especially, as far as I understand it, if you have a business over here, obviously you will need to pay taxes on the income that you've generated in Thailand as well. A DTA in place means that nothing needs to be filed or reported as tax was paid in another country. Also false. So I have some misconceptions about the DTAs as well, which I've now cleared up through reading this article. Hope this helps you as well. How will the filing system work? This is one that I'm curious about because I'm still not exactly sure how this works, as I'm sure many of you watching this are not as well. If you do remit foreign sourced income to Thailand, you will need to obtain a tax identification number to file a tax return. So that's something that I will need to get. An online portal for tax filing exists, but it is currently available only in Thai. Efforts to include English support are being considered. However, it's best to file through a tax professional, obviously. So just go through a tax professional. They can handle everything for you. You pay a small fee, and they'll do everything on your behalf. And pretty much anything that you need help with over here in Thailand, you can just pay someone to do for you. And that will be especially useful if a lot of the documentation's in Thai. Just pay someone to do it for you. The filing deadlines, it talks more about that here in the article. I think I'm going to skip over that. Here's the penalties for not filing your taxes, which I'm also curious about. They can, if they want to, they can do this via the OECD, which I've never heard of before, Common Reporting Standard, CRS. The CRS is an internationally agreed standard for the automatic exchange of financial accounts information-based tax authorities, blah, 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 blah. So basically, they have ways of tracking the amount that you're spending over here, transfers over to your bank account, all that sort of stuff through the CRS. And since its introduction, the CRS has been adopted by over 120 jurisdictions worldwide, including major financial centers and tax havens. The penalties for failing to file tax returns up to 200% of the assessed amount of tax that is payable. Surcharge of 1.5% for each month since the tax was owed. Okay, so you can potentially be getting hefty fines, essentially, for not filing your taxes. Penalties intentionally evading payment of tax by failing to file a tax return can be punished by imprisonment. For a term of up to 1 year and a fine of up to 200,000 baht. So definitely not something to be taken lightly. Make sure to file your taxes. If you're unsure how these tax changes will affect you, you want clarification on areas such as DTAs, available deductions and credits, and how to file in Thailand. The TTL readers that the Thailand Life can get a free Thai tax guide and complimentary tax consultation. So if you want more information about this, just check the link in the description and you can register your interest here. So yeah, it's best to just get a free consultation through the Expat Tax Thailand, which is included in this article. And disclaimer at the end, please note that I'm not a tax advisor. So he just goes into more information. He's not a tax advisor. On the information in this article constitutes financial advice, as well as this video where you're watching this on YouTube as well. The information detailed on this page is based on information provided by the Thai Revenue Department and Expat Tax Thailand. So I'd recommend, just signing up for this if you want to get your free Thai tax filing guide, essential resource for making informed, confident tax decisions, tax alerts, complimentary consultation. And I actually signed up for a phone call for Expat Tax a couple months ago. Unfortunately, I missed the phone call, so I will need to fill this out again and just get a consultation from them. But hopefully this has been very helpful for you. Please subscribe to the channel if you haven't already. And I will make more videos about this maybe soon. Let me know if you have any questions down below. And definitely check out the link in the description to read through this article on your own. This website has articles about all sorts of helpful things. So yeah, definitely recommend checking out the Thailand Life for more information. And then also Expat Tax Thailand. Thanks so much for watching. Signing off. Take care. Stay safe. Peace. Till the next one.